With the market trading at record high levels, many investors might find that their holdings have become tilted heavily towards stocks. In this week's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins us to talk about why this might be an excellent time to consider rebalancing. He's with Business Watch producer Kelly Leon in the studio. Mike and Kelly.
Thanks, Peg. Mike, thanks for being here.
Good morning.
Let's start with the simple question.
Sure.
What exactly is rebalancing? What do you mean?
Yeah, and in fact, it's a pretty simple concept, really. What we're talking about here is the asset allocation of your portfolio. And by asset allocation, all we mean is how much do you have devoted to the various different types of assets. How much percentage in stocks, how much percentage in bonds, so on and so forth. And so most people have in mind a target for those percentages, but over time as the market moves, those percentages begin to shift. So just as a basic example, say you started out and you wanted your portfolio to be 50% into stocks and 50% into bonds. Well, as that market moves, you start to drift away from that original target. And over time, say you find yourself now at 60% into stocks. So rebalancing is simply checking in periodically at where those percentages are, and if you have drifted, to move them back into line with your goal. So it's very important for the discipline of your portfolio, and actually it makes a great mechanism for almost forcing you to sell what's high and to buy what's low.
So, well, why is now a good time to do that?
Sure. Well, actually, Peg hit the nail on the head. Portfolios can become unbalanced very quickly when the market moves sharply one direction or the other. And we all know that since the election, the stock market has really raced ahead. So I think many investors would find that right now they're probably a little bit heavy in stocks. Probably if you were right on your target on election day, there's a good chance that you're not right now, and probably would have to sell a little bit on the stock side of that equation. Important too to remember that this is something that's critical for your retirement savings, a 401k for example. So important actually that many 401k plans now have an investment option that will actually do this for you. So many folks are kind of out of sight, out of mind type investors. So if that's you, you're probably not watching it close enough to rebalance on a regular basis. So checking to see if your plan actually has one of these options for you can be a good way to take care of that regularly.
So especially for those of us who fall into that out of sight, out of mind, anything that we should be attuned to as we either do this ourselves or reach out to someone to do it for us?
Sure, and that's a great point. Rebalancing is very important, but there's a caveat. And that is you need to make sure that you're rebalancing to the right target. So, you know, we had that hypothetical portfolio a minute ago, half into stocks and half into bonds. Maybe when you had that goal in mind 5 or 10 years ago, that made a lot of sense for where you were at that point in time. But what's happened in those last 10 years? Maybe now you're retired or you're saving for a new home or for college. So your life circumstances change, and that will make your target and your goal change as well. So rebalancing, very important, but just make sure when you're rebalancing that it's to the correct target.
Got it. Always great advice. Thank you so much, Mike.